Okay, guys. So I just wanted to take a second to discuss something because I've got a lot of people that I see online saying, don't worry about the rate at the time you buy your house. You could always refinance if um, the rates come down, which is definitely true. And, historically, we're in a cyclical market industry. So we're going to see interest rates rise and fall, and there will be an opportunity to refinance your house. And all the experts, including myself, are expecting, rates to be in the fives next year. So it may be sooner rather than later that you're able to refinance. But with that being said, I don't necessarily think that that's the only way to look at things. And so basically, what I did was I put together just some rough figures based on, a $750,000 purchase price. I used a base tax rate of 1.25, which is the base tax rate in San Diego. I used $100 a month for insurance, and then just threw $200 in HOA for the sake of it. And that's all part of this here. So you'll see I put together a comparison for my clients when it comes time to lock their rate so that they can see the rate that's available at par or basically without paying discount points versus lower rates that are available and the associated costs, these are just discount points expressed as a dollar amount. How much it's going to cost them, what the monthly payments are. And again, this includes everything. So, the taxes and insurance, HOA, et cetera. It all comes out to the total monthly payment. That's what I put in this column so my clients know what's coming out of their pocket. Then they can see how much they're saving per month and how many months they have to make that payment before they've recuperated the investment they've made in buying down their rate if they choose to do so. But people are not talking about the fact that refinances aren't free. There is a cost associated with doing so. So even if it's, $4,000 or $5,000 or something like that, people don't work for free. So in this column, if they were locking their rate today, there are actually rates that are available that are higher. And instead of a cost associated with it, the bank would give a credit back to the borrower to cover closing costs. And they can do this, when they're doing a refinance. But if you're refinancing to do a rate and term refinance and lower your interest rate, it doesn't make much sense to look at taking a higher rate that's going to cover your closing costs. You know what I mean? And another thing that it doesn't take into consideration, or a lot of people aren't talking about when it comes to, okay, just refinance your loan when it comes down to it. Well, let's take a look at the amortization schedule of a mortgage. They're very interest forward. So you can see here in the next month or so, basically the interest that's being paid here, $3,100 in the first year, $38,000 in interest, and the next year almost, let's call it $37,500. So if you refinance after it, let's say next year, it's $30,000 in interest that's going to be erased, because unless you refinance into a shorter term, which is going to cause your monthly payment to go up, which again is usually the reason that people are trying to do a rate and term refinance, is the exact opposite, to try to get their monthly payment down. Well, now you're looking at throwing away $38,000, let's call it, in interest that you've spent, plus the $4,000 or $5,000 it's going to cost you to do the refinance. Well, maybe you're better off looking at, what I was talking about earlier, and going here saying, okay, well, we can spend $17,000 up front, get our payment down to 5.5%. We don't have to cross our fingers and hope that rates come down and we can refinance. And, we don't have to worry about resetting the clock on our mortgage and going back and paying interest because of the way that mortgages are structured and how interest forward they are. So that's a big part of what I like to talk about with clients. And all I need to do to run a rent versus buy analysis, which is something that, your clients should be seeing, this takes into consideration a lot of the same details I talked about. And I'll show you in a second all of the details that we can adjust and make specific to clients. But what this is going to show you is, the cash flow difference in buying versus renting, basically your gains and appreciation and amortization over, the life of however long you select. In this case, I'm looking at 9 years. It shows you the cost to sell if you decide, you want to cash out on it, on the appreciation that you're seeing. Shows an estimated tax benefit, which almost nobody takes into consideration when they're saying, hey, mortgage is too much money a month and I just can't do it. I'm going to hold off. And, down here, you really see in a grid how much gain you're seeing in appreciation and amortization. And this is something I can make very specific to clients. And all that I need is basically what they're paying per month in rent, their renter's insurance. I put an annual rent increase of 6%. The reason I got this is basically comparable rent in the area. I did this for a conventional loan with 20% down, but I could always, make adjustments to that. Same with the interest rate. I did estimate high here on the rent versus buy because that makes it even more fair, I would say, and conservative. I need the purchase price of the property they're looking at, the tax rate to use, an estimate for their insurance, an HOA. I'll leave 6% in there for the cost to sell to play it safe. And then, I need to know how long they're thinking they're going to own this house for before they sell or refinance. And then they can see based on historical or forecasted appreciation, whichever they prefer or, seems best, I can, and most accurate, I can send based on that. And then I'll also need to know their filing status and their tax rate in order to get a more accurate estimate of the figure I showed here in terms of tax benefit. But if your clients aren't seeing this to get a better understanding of what it actually costs to rent versus owning a house and the benefits of home ownership, then, I'd really be happy to put something like this together for you, have a conversation with them just so that they can make an educated decision. And, something I would just strongly urge you, if you're on that train saying, hey, don't worry about it. Housing values go up. Don't worry about the rate. Just buy. There are people out there who are stretching their budget and really getting close to living paycheck to paycheck to cover a monthly mortgage expense. So they've got to really understand the ins and outs that go, basically to explain the benefits of owning versus renting so they can make an educated decision, as opposed to just saying rates are going to come down eventually. You'll refinance then and you're just dating the rate and marrying the home. Don't worry about it. So if you've got any questions or there's anybody that you think could benefit from this, feel free to share it or reach out, and I'm happy to have a conversation with them as well. I really appreciate it, and we'll